This is Ferre with TaxSaleSupport.com with another video in our Tax Sale Fundamentals series. The question is, and this is a question that we get oftentimes, do tax liens really offer guaranteed returns? It's something that people have heard regularly, and so we wanted to answer this question in a short video here that people could look at if they're looking into tax liens and deeds. The answer is not quite so simple though, because the answer is both yes and no. So let's first handle the yes side of the answer. Now, if you're new to tax liens, there are other videos we have that you can watch that will explain more of the mechanics of how it works, the life cycle of a lien. But here are a few points that will help answer this in the yes. First off, once a tax lien is purchased, there are really only two possible outcomes, and they both depend on what the property owner does. Keep in mind that tax liens are meant to redeem. That's their purpose. The purpose is to give the county a way to create revenue now. In other words, they need the delinquent funds that are owed to them, but they need a faster way to collect them. And so the tax liens are simply something that the county can create that also help their enforcement. But they are meant to redeem, meaning that people are not meant to lose their property, and that's why the vast majority of liens redeem. Now, the other option of that is to foreclose on the property. Now, when we talk about redemption, what we mean by that is that the person that has the delinquent taxes they owe, they eventually are going to pay their property taxes because they don't want to lose their property to foreclosure. So when they pay the county what they owe, the county cuts you a check for the amount that you paid for the lien plus the interest rate return that you've earned up to that point. And like I said, that's what happens the vast majority of the time. The second option, though, foreclosure, is what happens after a set redemption period has ended. So if the lien still hasn't redeemed, and let's say that the lien has a 2-year redemption period, at the end of that 2-year period of time, the lien can be used to initiate and to foreclose on the actual property. So in reality, the answer is yes. I mean, in many ways, the return that you earn is guaranteed in a way. But there's also the no side of it. The no side of it is this: a tax lien is only as valuable as the property that it is placed against. So, the more valuable the property is, the greater value that that lien has. After all, the lien utilizes the entire property as collateral for the debt. So the lien has incredible power. It is a first position lien, meaning that it takes priority or precedence over other liens or claims. However, your options are to either have the lien redeemed because the person pays off the delinquent property taxes, or to pursue foreclosure. So the question is, what happens if the land doesn't have any real value? And that's what we mean by useless land. When we talk about useless land, we're talking about land that has no real use or value to anyone. It's rare, I guess, to find land like this, but at the same time, you can find lots of it throughout counties. Small pieces of land that have irregular shapes that are maybe landlocked. The small strips of land, some of the leftover stuff. These are all different types of properties that wouldn't necessarily have any real value or use. And if that's the case, then the problem that the investor is left with if you purchased a lien against a piece of useless land is, if the property owner doesn't pay off the delinquent property taxes, then your only option there is to foreclose on the property. But what is the purpose of foreclosing on a property if it doesn't have any value? And that is the predicament that you can get yourself into. Now, the good news about this is that it's very easy to avoid those types of properties. It's actually very easy in general to invest in tax liens and to identify good tax liens. In fact, it is easier to identify good tax liens than it is to accidentally buy a bad tax lien. But if you have any kind of knowledge or understanding at all, then you can purchase your tax liens in a way that they are basically guaranteed. And so it comes down to the user, I think, and the investor, I guess you could say. But the reality of it is that tax liens are by far the safest way to invest and to earn high interest rate returns. I've never seen another investment form that can earn rates as high as 10 to 18% or even more in some cases that can provide anywhere near this level of security. This is a highly secure investment, which is why banks and large financial institutions have been buying them up for years. So, if you're looking for a way that you can personally invest your money, I would recommend tax liens if you're looking for a way to earn a good high interest rate return. However, if you're looking for property, then we'd probably direct you to tax deeds, which will be in another video that we'll create here. Now, if you'd like more information like this, you can go to our website at secretsoftaxlieninvesting.com to get your own free ebook. Thanks for watching.